I'm Mike Loewengart with E-Trade Financial, here with the market update for September. Stocks produced modest returns after a volatile few weeks that included interest rate hikes and a fresh round of tariffs. In September, simmering trade tensions boiled into a full trade war. The Trump administration slapped $200 billion in tariffs on China, and China retaliated with $60 billion in tariffs of its own. Meanwhile, the Federal Reserve raised rates for the third time this year and indicated they expect to continue on their path of rate normalization. That will likely mean an additional rate increase in December, with a target of 3 or more in 2019. In the equity markets, U.S. large caps generally outperformed smaller company stocks. Overseas, developed markets rebounded in September, led by Japan and Europe. Emerging market stocks came under pressure once again amid trade deficits, heavy dependence on foreign investment, and generally weak currencies. In the fixed income markets, yield spreads narrowed, reflecting optimistic market sentiment, although a relatively flat Treasury yield curve continues to cause concern. As we move into the fourth quarter, here are a few themes we'll be watching. First are international equities. Not only are their valuations compelling amid all the trade tensions, but they can also be an important source of portfolio diversification. Second are tariffs and Q4 earnings. We haven't yet seen what effect tariffs will have on corporate earnings, but we're about to find out as third quarter earnings season draws near. Look for revisions in earnings guidance as a barometer of where stocks may be headed. And finally, midterm elections, which will be closely followed worldwide. All seats in the House are up for grabs, and the political makeup of the Senate also hangs in the balance. The markets don't like uncertainty, and there's nothing certain about what will happen on November 6th. So while uncertainty rises and risks abound, our message to investors remains unchanged. Stay diversified and focused on the long term. Near-term risks will always come and go, but in the context of a long investment horizon, they become far less of a factor. Thanks for watching, and we'll see you next month.